Ford lost an estimated $44,000 on every single electric F-150 Lightning it sold. Not $4,000, not $4,400. $44,000 per truck on a vehicle that started at nearly $55,000. Multiply that by tens of thousands of trucks, add in billions in factory investment, and you get one of the most expensive bets in the history of the American auto industry. A bet that was supposed to prove Ford could out-innovate Tesla on its own turf. Instead, it turned into a financial sinkhole so deep that Ford eventually had to take a $19.5 billion charge just to walk away from it. This is the story of how the future of trucks nearly dragged one of America's oldest car companies down with it, and how Ford is now trying to quietly rewrite the ending. Rewind to 2021. Ford unveils the F-150 Lightning, and for a moment, it feels like lightning in a bottle, pun very much intended. This isn't some niche EV startup product. It's the electric version of the best-selling vehicle in America, the truck that's been Ford's cash cow for over 4 decades. And on paper, it was genuinely impressive. 580 horsepower, 775 pound-feet of torque, 0 to 60 in around 4 seconds. Quicker than some sports cars, a frunk big enough to tailgate out of. Journalists who drove it at launch, including reviewers who'd driven dozens of vehicles that year, called it mind-blowing. It could power your house during a blackout. It could tow. It could haul. It was marketed almost literally as a smartphone that could tow a boat. Ford didn't just dip a toe in either. The company built an entire dedicated factory for it, the Rouge Electric Vehicle Center in Dearborn, Michigan, at a cost of roughly $700 million just for construction, then another $250 million to expand it. Add in battery and powertrain development, and total investment estimates run as high as $10 to $11 billion. This wasn't a side project. This was Ford betting a huge chunk of its future on one truck. For a moment, demand looked electric too, pun intended again. Ford had to pause reservations because so many people signed up. It looked like the beginning of a new era for America's best-selling vehicle. But here's the thing about betting billions on being early. Being early is expensive, and the market doesn't always show up on schedule. The first problem was cost. Building a full-size electric truck meant packing in an enormous, expensive battery. And batteries are the single priciest part of any EV. Ford couldn't sell the Lightning at its originally promised price without bleeding money on every unit. That $44,000 per vehicle loss figure wasn't a rumor. It came directly from analysis of Ford's own financial disclosures. The second problem was the broader EV market cooling faster than automakers expected. Mainstream truck buyers, the guys who need a truck to actually work, tow, and survive a job site, turned out to be far more cautious about range anxiety and charging logistics than early adopters. Sales that once looked promising started sliding. By the third quarter of 2025, Ford had sold a little over 23,000 Lightnings for the entire year, a fraction of what a normal F-150 trim sells in a single strong month. Then the external shocks started piling on. The federal $7,500 EVI tax credit, the subsidy that had been quietly making electric trucks look competitively priced, expired. Almost overnight, Lightning sales cratered even further, with Ford's overall EV lineup seeing a steep drop in a single month alone. And then, almost like the universe was piling on, a fire broke out at one of Ford's key aluminum suppliers in 2025. The Lightning's body relies heavily on aluminum construction, and with that supply chain disrupted, Ford was forced to halt production entirely. For weeks, the truck that was supposed to be Ford's electric flagship simply wasn't being built at all. By this point, the losses weren't hypothetical anymore. They were showing up in black and white on Ford's balance sheet. The company's EV division, known internally as Model E, lost roughly $5 billion in a single year, 2024, alone. Since 2023, Ford's total EV-related losses had ballooned to an estimated $13 billion, Wall Street noticed. And Wall Street's patience for a truck company burning billions on a product line that wasn't turning a profit was not infinite. Internally, according to reporting from the Wall Street Journal, executives began actively debating whether to just end the Lightning program altogether, making it potentially the first major casualty among full-size electric pickups in America. Ford's own CEO, Jim Farley, was blunt about it in a CNBC interview, essentially admitting that the high-end EVs in the $50,000 to $80,000 range simply weren't selling the way the industry had bet they would. In December 2025, Ford made it official. In a filing with the SEC, the company confirmed it was taking a combined $19.5 billion hit tied to rationalizing its EV strategy, including canceling 3 other planned electric vehicles entirely and ending production of the current F-150 Lightning as we know it. For a truck once positioned as the symbol of Ford's electric future, that's an extraordinary fall. A flagship product backed by over a decade of engineering investment, effectively written off in a single financial filing. But, and this is the twist, Ford isn't fully abandoning the electric truck idea, it's mutating it. Instead of killing the Lightning concept outright, Ford confirmed the truck will return in a second generation as what's called an EREV, an extended-range electric vehicle. Think of it as a hybrid approach. It still drives like an EV day-to-day, but it carries a smaller battery paired with a gasoline engine that acts purely as a generator to recharge the battery on longer trips. Ford is promising over 700 miles of total range and towing capability that rivals a traditional gas truck, directly solving the 2 biggest complaints that killed the original: range anxiety and charging headaches. The Rouge Electric Vehicle Center, the plant built specifically for the all-electric Lightning, is being retooled to build gas and hybrid trucks instead, salvaging value from a facility that could have become a billion-dollar white elephant. Even Ford's Kentucky battery plants are getting repurposed, shifting towards stationary energy storage for data centers and power grids rather than sitting idle. Interestingly, some of the criticism aimed at Ford might be a little unfair. Real-world data from Lightning owners who've racked up nearly 40,000 miles shows the batteries are holding up remarkably well, with minimal degradation. Owners who actually bought the truck tend to love it. It's proven reliable, capable, and low maintenance in daily use. The problem was never really the product itself. The problem was the economics. A rabid, loyal fan base of roughly 100,000 buyers just wasn't enough to offset nearly $20 billion in development and manufacturing costs. The F-150 Lightning is a rare kind of cautionary tale. Not a story of bad engineering, but a story of a great truck launched a few years ahead of what the market, the supply chains, and the subsidies could actually support. Ford didn't just lose money on a vehicle, it nearly bet its entire EV strategy and a meaningful chunk of its balance sheet on a single product line, and had to pull the emergency brake before it spiraled further. Whether the reinvented EREV version succeeds where the pure electric truck struggled will say a lot about whether America's truck buyers were ever against electrification or just against the price tag that came with it. If you want to see how Ford's gas-electric hybrid gamble plays out when it lands in 2026, make sure you're subscribed, because this story isn't over either.